Alright guys, welcome to today's presentation. Today we're going to discuss the daily bias and all aspects related to it. Now previously we had discussed about the PD arrays, the ICT PD arrays. We had a lesson which was very touching. If you haven't watched it, please go back and watch it on the link below. Let's begin. Alright, so what is the daily bias? Understanding how market expectations shape trading decisions. Daily bias is a critical concept in trading that guides expected market direction based on smart money footprints. It basically gives you the direction of what is going to happen on the daily basis. If you go down to the hourly 15 minutes, you can just see what it guides you to do. It serves as a framework to frame the trading day context, aiding traders in making informed decisions about entry points and risk management strategies throughout their trading activities. On why it matters, it gives us the market clarity, it provides a clear direction for trading decisions. Number two, risk reduction, lowers risk through a selective trading strategies. And number three, we have the trade timing, enhances timing and confidence in market entries. Now let's move on to the daily chart context and bias definition. Daily charts is basically to establish the foundation for bias analysis. Let's say now an example, you have been given the daily chart. Of course, you have to go to the higher time frame, like now the monthly time frame, the weekly time frame, to give you what is going to happen in the weekly perspective. Because in our next lesson, we are going to discuss about the weekly layout. All these, they have to be matching each other for you to understand what is happening in the markets and also trade in a very contextual way. The market environment types. Now we need to understand that the market has to be having different ways it delivers its price. Number one, it can be trending. We have the clear high highs, the high lows, or we have the lower lows and the lower highs. They have to be very clear. Strong displacement, we have the shallow pullbacks. And the next type, we have the mean reversion, which is now the price extended into premium stock discounts. Prior day closed far from the equilibrium. And then the third one, we have the range bound, which is kind of it concentrated into a specific range. This is where the overlapping candles, we have overlapping candles. There's no displacement and there's low probability you cannot trade these markets because obviously you'll be stopped out. Now, on the previous day analysis, we have the key levels. The key levels, the previous day actually tells you who is in control. We need to analyze the open versus the close, the previous day highs and the previous day lows taken. Close near highs or lows. The rule is basically close near highs, the buyers are very strong. Close near the lows, the sellers are strong. Both sides taken, there was distribution. Now let's move on to the daily liquidity map overview. Key liquidity zones. We have the daily targets often sit at the previous day highs or previous day lows, which is known as also the external liquidity ranges, equal highs and lows. Weekly highs and lows, Asian session range, obviously because we understand that trying to trade during the London and also the New York sessions, you need to understand that the Asian session has to concentrate in some way for you to target the liquidity in the respective timeframes, like now the London and the New York. The bias question basically is which liquidity is most likely to be taken first. All right, now let's move on to understanding premium and discount zones. The premium versus the discount. Bullish bias only buy in discount. If there is a bearish bias, only sell in premium. Number one rule is there is no chasing price. Don't chase price. If it is a bearish day and you have not entered in the premium, please do not chase price. Wait for it to give you a clear entry for you to enter. And do not enter your entries at the extremes because the market can be lying to you before it continues lower or higher. All right. Let's now move on to daily open and bias strength. The bias strength basically the daily open is a key reference point. General tendencies above daily open, bullish intent. Below daily open, there is a bearish intent. Bias strengthens when price reclaims the open with displacement. Session timing. We all know that Asian session gives us the concentration. It provides us the liquidity entrapment for us to target during the London and the New York. So Asian session provides the range and liquidity build. London session, it raids the liquidity of the Asian session and also it can expand in some cases but the New York session gives us the expansion towards the buyers. But of course, you need to understand how these things, they flow to each other before you trade in this aspect. Now, when not to trade, to trust the buyers. When there is a low volume, lack of activity leads to unreliable signals. Let's say an example, the market is just range bound, it does not move or do anything. Then obviously you cannot trade it because obviously you'll be stopped out. Number two, we have overlapping sessions. Conflicting signals can create a confusion in trades. Let's say we have during the transition between the Asian session to London session, obviously the market is not giving you a clear indication of where it's heading to. Do not trade this during the overlapping sessions. And also number three, we have the major news. News impacts can disrupt technical analysis significantly because obviously they can, if you are not aware of the markets very well, it can stop you out and you lose your investment. The daily buyers checklist. You need to understand the previous day levels, confirm key levels, key price levels from yesterday, the market environment, and identify the current market trading conditions. Liquidity mapping, map crucial liquidity zones for informed decision, like now the previous day highs, lows, and also internal liquidity zones. Like now we have the order blocks, fair value gaps, and everything. The final takeaway from this, we need to understand the market, master daily bias for confident trading and success. Mastering daily bias is essential for any trader aiming to align with smart money principles. By understanding market direction, liquidity zones, and strength of the bias, traders can make informed decisions and enhance their overall trading strategy. Embrace this framework to navigate the complexities of the market with confidence and clarity. All right, well, thank you guys for understanding also trading with us. This was a very nice presentation. Let's meet the next time as we discuss the weekly layout. Thank you so much.